Good morning, everyone. We are back again with accounting class. Already we have done 2 sessions with commerce. Now we are here with accounts class. As you know, children, commerce subject is divided into 2 parts. One already commerce we have started, 2 sessions completed. Now introduction of bookkeeping accounts class. We are going to start. Our sir S.RAVI Shankar is running for the session, and myself principal is working as a teacher with 20 years experience academics, he has done job other departments.
Madam, shall I start?
Yes, sir, over to you, sir.
Thank you, madam. Thank you all the principals for your motivation and cooperation. Madam, shall I start?
Yes, sir. Please start.
Sir.
Madam.
Please share your
Madam,
screen.
shall I start?
Sir. Yes. Please share your screen and start.
Okay, madam. Good morning, one and all. Legend of our model schools additional director, A. Satyanarayan Reddy Garu. The greatest personality behind the success of model schools, our joint director, P. Rajiv Sir Garu. The greatest principles of model schools behind every success. Respected mind-like teachers and my dear students. A very good morning, one and all. Dear students, I would like to congratulate you all for selecting CEC group as your career. In present globalization phenomena, CEC group and commerce especially offering more enormous opportunities to you. As a commerce teacher, I can proudly say that you can avail more employment opportunities, whatnot, everything, all the departments in banking sector, you can get the jobs, in insurance sector, you can get the jobs, and transportation department, in advertisement department, not only, everywhere you can go for the jobs in all the departments what you like, and you can become a teacher, you can become a lecturer, whatnot, everything is possible with the CEC students. Okay, so that's why I would like to congratulate once again. And now, yes, we are going to enter into our real-time session of today's class. Okay, you have already known about commerce in your previous session. Yes, conducted by one of my commerce fraternity, sir, right? And we will learn more about in today's session about commerce subject. Okay, this is CEC first year, commerce subject for 100 marks. And commerce subject which has two books, part A, commerce, 50 marks, and part B, accountancy for 50 marks. Students, take one notebook and pen, write down the important points. But okay, don't be sit like idle. Okay, right. You can see both the textbooks on the screen itself. One is commerce, and the second one is accountancy. Yes, you can see that you have two textbooks. This is commerce for theoretical part, and this is accountancy for accounting. Okay, right. Right. I will explain more in detail regarding both the textbook. This is examination pattern. We have to attempt commerce subject for 100 marks. Yes, part A, commerce theoretical part, which have long answer type questions. You have to attempt two questions for 10, 2 into 10, 20, and short answer type 4 into 5, 20, and very short answer type 5 into 10, total 50 marks. Okay, coming to part B, accountancy. You have to attempt long answer type of questions is very big problem. One is very interesting problem. You have to attempt here 1 into 20. You will get 20 marks here. And short answer type questions. Yes, one more short problem here. 1 into 10 marks. And you have to attempt two short problems. 2 into 5, 10. And again, very short answer type questions. 5 into 2, 10. So total 50 marks, right? This is your examination pattern. Okay, right. Next. While going into a real session, yes, I would like to pose a simple question, right? Give your responses in short box. Where do you go to purchase your daily needs like paste, soap, sugar, etc.? And your options are DMart, Walmart, local shopkeeper, and grain market. Is where you go when you wake up in the morning. Yes, if you saw that the paste had lost or the paste had completed, the paste completed. Yes, where will you go? Right. Give your responses in your chat box. Definitely, yes, you will consult, you will visit your local shopkeeper. Okay. The local shopkeeper will provide you all the daily needs. Okay. To get a certain profit. Okay. Right. Had you, yes, any experience regarding your local shopkeeper by seeing or by watching him? Well, yes, how he maintain his business or his economic activity, so-called economic activity, which was introduced in your previous session, right? Yes, business is an economic activity. Okay, right. So to find out what he gained, every businessman or your local native shopkeeper try to writing something about his transaction done. Okay, right. What is the requirement? What is the need to write all those activities done by his business? Is to find out the profit or the loss occurred due to his business activities. Okay, so that's why the businessman or your local native shopkeeper will record certain transactions or certain activities done throughout his business. Okay, right. After completion of certain period of time, maybe 1 week or maybe 1 week or 1 month or certain period of time, he will look into his business matters to find out, yes, what he gained. Okay, so that's why he record his business transactions roughly, I think, okay, roughly on a white paper or any other book to find out what he gained. Okay, right. So that's okay. When coming to real-time business phenomena, yes, we have certain approved systems to record business activities. That is so-called bookkeeping and accounting. Okay, right. We'll learn more about those bookkeeping and accounting in our today's session. Okay, right. So it's not at all a new subject to you all. It's not at all okay. Some felt that yes, commerce is a new subject, as we had not seen any topic regarding this like in our previous 10th class or 9th, but it is already yes, it had been experiencing by you all, but yeah, you may not know that this is commerce activity and that this is a business activity. But okay, right, we may see certain new terminologies and certain new words, okay, in today's session, and we'll expose to them. Okay, bookkeeping and accounting. What is bookkeeping? Bookkeeping is an activity that shows to keep a record of business transaction. Is what we discussed earlier. Yeah, the recording of activities done by a businessman. Okay, for a certain period of time, maybe 1 week or 1 month, right? He will record in a white paper or he will record on a book. So called that maintenance of that recording of that writing of transactions is known as bookkeeping. Okay, understood, children, right? It's nothing a new word. Okay, you can understand more by yes yes, reading this one and this information. Bookkeeping is a recording of those activities of business in a book or in a paper. This is the primary task of recording of transaction. This is the primary task of accounting. Bookkeeping is also known as a permanent record. Permanent record, yes. And come to accounting. What is accounting? Yes, this is the complete process of business transactions, which gives us more and more information, which gives us more and more results to know about entire business organization. Yes, how can we understand this? Accounting. Accounting is a system which collects and process of financial information of a business. Okay, which collects the information, right, through bookkeeping process and through business activities done by the business. Yes, it collects the raw material like transactions and processes them to find out the ultimate result which are required by the businessman. Okay, right. Accounting is not at all a trouble word. Yes, it is a system to collect and process the financial information. Okay, right. Note down the points, children. Yes. Next, we will enter into accounting process. Right. The system which processes the transactions in systematic manner to provide useful information for the important persons or interested persons of the business. Okay. Yes, how can you say, yes, who are the interested persons of the business? The first primary person, the first important person of the business is the owner, na? Okay, right? The shopkeeper itself, right? He tried to look into the business transactions to find out what he gained or what he lost. Okay, so that's why the accounting process, which gives a more and more useful information to the interested persons. Okay, the steps involved in accounting process as first one, identifying, recording, classifying, summarizing, reporting, analyzing, interpreting. Okay. Entire accounting process, or these are the steps involved in accounting process. Okay, and we will learn in detail about each and every step. Identifying. Identifying means recognizing the business transaction. This business transaction is done for money. Okay, no, right? So the first step is to recognize and find those economic activities which are called as transactions with the, yes, not by seeing or not by taking from any other, okay, but with the help of documental evidence, so called as receipt invoice. Okay, we can see this is an invoice regarding certain purchase from a shopkeeper. Okay, right, and this is also a receipt, right? Payment of electricity bill. This is proof. This is documental evidence of, yes, economic activity or transaction. This is, yes, this is the electricity paid, bill paid for rupees 3,000. This is the proof. Okay, this is the proof for any transaction. Yes, we can take it as transaction. Okay, we can collect it as a transaction. And the first step is completed, and move on to next step. After finding the transaction, we have to record. Recording. Record of transactions in the subsidiary books. Yes, you, okay, right? So in first step, we are all gather the transactions with the documentation evidence with the proofs, and then we will enter into record those transactions on date wise in particular accounting book. Yes, particular accounting book, the primary book, which is called as journal. Okay, or subsidiary books, that will enter or will record those transactions in the primary books. So we will, yes, journal is the primary book. We will learn more in detail in next session about journal and subsidiary books. We have separate topics for journal and subsidiary books. Okay, and just remember it as the journal is the entry. Okay, the entry for a book, right? Record for a book. Next one, after recording, is classifying. Classifying means separating. Yes, based on the nature of the transactions. So we have to separate, and we have to keep separate of each and every transactions based on the nature. Okay, based on the transactions, nature of the transactions at one place, and that is so called in ledger. Okay, right. Ledger will consist each transaction separately. Yes, you can see the example for those ledger: machinery account, furniture account, S.RAVI account. Okay, we'll classify, we'll separate those business transactions of machinery account at one place, and transactions regarding furniture account, furniture at one place, and transactions regarding Mr. Person, Ravi, is at one place. Okay, and this is regarding classifying. Next, summarizing. Summarizing, after separating the transactions or after recording the same transactions in at one place in ledger, so we have to find out the balances of the closing balances of each and every account or each and every ledger. So this is the process of extracting the balances of all accounts to prepare trial balance. Okay, again, new word, trial balance. This, what is the trial balance? Trial balance is the statement, yes, which shows us the accuracy of the accounting. Okay, this may, yes, it helps us to find out any error happened during accounting time. Yes, okay, right. So the fourth step, we'll find out the closing balances of each and every account, and will transfer them to trial balance to find out the accuracy of accounting. Okay, next one, reporting. Reports. reports generation of accounting. And finally, every businessman wants to know the reports of the business. Yes, what he gained, a profit or loss. So that's why we have to prepare, yes, reports of the business organization with the help of accounting. So the classified information available from the trial balance, okay, all the balances of all the extracting balances of, yes, each and every account will be available with trial balance, okay, and will prepare final reports with the help of those trial balance elements, okay, and those are the reports: profit and loss account and balance sheet. Okay? Those are the new words to you all. Profit and loss account. Yes, itself, the heading itself showing, the heading itself saying it's, yeah, profit or loss. Okay, the statement, sorry, the account which shows us the profit or loss gained by the business itself. And the balance sheet is statement which shows the assets and liabilities of the business. Okay, and this is reporting process. And then after getting reports, we have to analyze the reports, okay, for better understanding, more understanding by the business man. It establishes the relation of it and the balance sheet. Okay, right. So the effect and the influence of the aspects done by the business is, okay, the items which caused for, okay, the elements or the transactions which caused for profit, loss. So we have to analyze what is the, yeah, what is the need for analyze. Just problem itself. Yeah, okay. Sorry for the intern. Okay. Yes. Next one, interpretation. Interpreting or interpretation. Interpreting. It is concerned with the useful inputs to the user so as to enable them to calculations from time to time. Interpreting the results. Yes, the or business man can decision interpreting reports. Yes, next, accounting cycle. Accounting cycle, it is the complete practical phenomena of accounting. Madam?
Please share your screen, sir.
Madam, is it visible?
Yes. No.
Accounting cycle. Madam, is it visible?
Yep. Please share your presentation. Your screen is visible. Share your presentation, please.
Okay. Yeah, madam. It is in Google. No, madam. Madam, can you stop for a while? Please.
Is there any technical issue, sir?
Yeah, madam. It's not opening. We are in Zoom meeting. Yeah.
Sir, it's in your Google Drive, I think.
Madam?
It's in your Drive, I think. Just click on that.
Yeah, madam. Google Drive. It's on desktop, madam. Actually,
Okay, okay.
Google. Yes.
Swipe your desktop then.
Presentation. Actually struck. Madam, is it visible?
Yeah, yes, sir. Yes, sir. Please continue.
Okay, madam. Okay, next topic is accounting cycle. Yes, which is known as practical accounting phenomena. What we can say, the actual recording of the transactions to find out the results of the business. Okay, right. Accounting cycle is a complete sequence of accounting process which includes journal, ledger, trial balance, and financial statements such as trading account, profit and loss account, and balance sheet. Okay, right? Yes, we had found certain new words: journal, ledger, trial balance, and financial statements, trading account, profit and loss account, and balance sheet. Okay, so these are the chapters we may find in the next sessions, right? We'll learn more and more about. Okay, but what we had introduced already about the journal, ledger, trial balance. Okay, right. So the accounting cycle is a complete practical manner of accounting, which starts with the collection of source documents and then enter into recording in journals and then go for ledger and will make trial balance, and finally we conclude to will enter into reports generation, so called financial statements. Okay, right. Accounting cycle, which starts or which begins with the source document, collection of source documents, is what we had seen earlier, right? In our previous in our session, just previous. If you look into just 15 minutes back, yes, we have certain source documents, right? Okay, electricity bill payment and certain vouchers we have seen. Okay, right. Next. Okay, basic accounting terms, journal, ledger, trial balance, if this is your first class, okay, more and more. Okay, before entering into the real-time phenomena or the real-time accounting process, yes, we have to learn certain words, we have to learn important basic terms regarding accounting. Okay, right. The first one, accounting, accounting entry, transactions, accounting period, proprietor, capital, assets, liabilities, drawings, debtors, creditors, purchases, sales, stock, income, expense, rent. Okay, right. Learn more in detail to understand, to know about certain new accounting terms, to understand more about accounting. Okay, sorry for the interruption. Account. What do you mean by account? Account. An account is a summary of relevant business transactions at one place relating to your person, asset, expense. Yes, what we will get, nothing will get. Yes, it is like a pure unknown statement. Okay, you can understand it by an illustration, an example. Yes, if you visit your local shopkeeper, right, for paste for ₹10. Okay, right. The shopkeeper will sell it to you and get 10 rupees from you. Okay, right. In business view, in business point of view, it is a transaction. Okay, the businessman or the local shopkeeper will record certain books. Okay, now yes. Yes, what he will record? Yes, I sold paste to some person for ₹10. Yes, here two aspects are happening here. One is he is selling his paste, and the second one he is receiving 10 rupees. Okay, two aspects happen. One is selling paste to you, and second one is receiving 10 rupees from you. Okay, that's aspects, or we can simplify them as one is sales and second one is cash. Okay, yes, we can say two aspects are happening here. One is sales and second one is cash. Okay, right. He will record with the help of those aspects, and each aspect is known as account. Here it is, sales is an account and cash is an account, right? Both are interlinked with the one transaction only. Okay, right. It is a T-shaped pro forma which has two sides called debit side, left hand side, and credit side, right hand side. So based on the nature of the transaction happened, we'll record. Okay, right? We'll learn more about what is debit, what is credit in our next session in accounting principles. Okay, account, the pro forma of account, yes, debit side, credit side. Next, second one, accounting entry. Yes, after finding a transaction, after finding an aspect happen, will record it in a book. Okay, so that record of financial transaction is so-called accounting entry. Yes, where we record the financial transactions, yes, itself in journal. Okay, the first primary entry what we discussed just now, just previous. Okay, accounting entry will record the where we learned. Yes, students following? Are you following my point? Yes, in recording process now. Okay, so we'll record all the financial transactions. After identifying, we will record those transactions in a book, so-called journal. Yes, have you remember that point? Yes, that is called accounting entry. After finding the transactions, we'll record those transactions in so-called book, journal, and particular entry. That entry is called as accounting entry. Example, journal, cash book, etc. Okay, next, transactions. Yes, we are discussing about the recording of transactions, the recording of economic activities. Yes, what is transaction? Is there any meaning or definition for transaction? Yes, definitely. Transactions are those activities of business, not those activities, economic activities of business, which involves transfer of money or goods or services between two persons or two accounts. Okay, transaction happens, right, between two persons for maybe a cash or for maybe goods or services. Okay, example, purchase of goods, sale of goods, salaries paid, cash deposited into bank. Okay, yes, you can observe on the screen certain transactions, examples for certain transactions. Mr. Ramu commenced business with 98,000, cash deposit into State Bank of India 50,000, purchased office furniture for rupees 10,000, purchased goods from Amar 12,000, purchased goods for cash 5,000 from Ramesh, cash sales 11,000. Okay, so these are the examples for business transactions. Next, accounting period. Okay, yes, what we are discussing now here, right? We have to record those financial transactions. It for what time we have to record? For what time? Okay, yes, at what date we have to start and at what date we have to end to find out the results or reports of the business. So called accounting period. The period of time for which an operating statement is prepared. Yes, this is 1st April 2022, 31st March 2021. Okay, we have certain financial period or accounting period, right, mentioned. Yes, every business or every accounting year starts 1st April of that particular year and ends with the next 31st March of the next year, right? The present financial year or the present accounting year. Please note down the point, students. Yes, the present financial year is 1st April 2022, 31st March 2021. So we have to consider the transactions happen in between these duration only. Okay, right. Proprietor is a new word. No, after seeing this picture you can simply understand what is proprietor. Okay, yeah, we are seeing a person in shop. Okay, he is a businessman, he is a proprietor. A person who owns a business is called A proprietor, he contributes initial money to commence. Commence means to start his business, called capital, with an intention of earning profit. Why he started the business? Why he wants to start a business? To earn profits itself. No. Okay, every businessman will establish or starts the business to get profits only. Okay, right. Next one, capital. Capital is a new word. Yes, the amount invested in the business by the proprietor with an intention of earning profit. Yeah, every business requires, yes, money right now. Okay, cash to start the business. The amount which was invested by the person, okay, the amount invested by the owner is called as capital. The initial amount to start the business is called capital. Okay, next one, assets. Yes, assets. Assets or the properties or the resources of the business owned by the business. Okay, right. The assets is, what are the need of assets? Okay, to run the business, for the smooth functioning of the business, every business which requires certain assets. Okay, right. We may see that business organization located in certain buildings which may have certain furnitures, yes, plant and machinery, certain machineries, okay, furniture, building, land. Okay, those are called as assets. Assets are the properties or resources owned by the business. Yes, you can see on the screen cash in hand, plant and machinery. Second one, yes, this is plant, this is cash which is required by the business, and this is plant and machinery, okay, which is used in the production or for the help of the business itself. And the furniture, this is furniture. Okay, next we'll move into next one. Assets are classified. Assets can be classified into two: tangible and intangible assets. Again, new words. Tangible assets. What do you mean by tangible? Have you heard this word before, students? These are the assets having physical existence, which can be seen and touched. We can see, we can feel it, we can, yes, move those assets. So called tangible assets. We can see and we can touch. We can use. Okay, with our, we can touch with our hands and we can see and we can move those from place to place. Such type of assets involved in the business are so called tangible assets. Plant and machinery, cash, furniture is what we have seen in previous slide. Okay, and then coming to intangible assets. So it's an adverse to tangible assets. Intangible assets having no physical existence, and those cannot be seen and touched. Okay, how can you say that we can't see and but it will be considered as asset? Okay, example, is there any asset like that? Yes, goodwill, patents, trademarks. Okay, these are all new, quite new words to you all, but you may learn more in detail in the next sessions. Yes, I will introduce those words to you all. Goodwill. Goodwill means the good reputation of the business. Okay, right? Certain business having more and more profits in the market when compared to other business organization, because those who have good reputation, good name in the society will get more profits than, more will attract more customers than any other business. A certain good name, good reputation is called goodwill. And patents, trademarks. Okay, trademarks is for commercial food products, will take trademarks and patents, and okay, patents also on particular products. Okay, we'll learn more in next sessions. Next one, liabilities. Liabilities refer to the financial obligations of a business, financial responsibilities. Okay, the amount paid to others are known as liabilities. Okay, so every business organization may have sufficient funds to run the business. In that particular time, it may take necessary money or necessary cash requirement from other persons. Okay, example, loan from bank, creditors. Okay, loan from bank. The business may take loan from bank. It is considered as liability because the business organization had to pay in nearby time or in future on a particular date. Okay, those are called as liabilities. And next one, drawings. It is the amount of cash or value of goods withdrawn from the businessman. Okay, withdrawn from the business by the businessman or the proprietor for his personal use. Okay, right. Yes, if you're a businessman having, yes, or running a ready-made garment shop, ready-made dresses shop, and if he takes a dress for his son, or if he takes a dress for his daughter and not paying any money or any cash to the business, certain withdrawals of certain purchases or certain takings from the business are known as drawings, right? So the amount of drawings by the businessman is the amount have to be deducted from the capital. Next one, debtors. A person who receives a benefit without giving money but liable to pay in future is a debitor. Okay, right? If you can understand more by taking an example. Yes, if you are purchasing from your local shopkeeper for rupees 100 and but not by paying certain amount on the same day or same time of transaction. Yes, the businessman giving goods to you but not receiving the money. Okay, but you have to pay in nearby time, right? Okay, so the person or the businessman will record you as debitors. Okay, right? Next word, creditors. A person who gives a benefit without receiving money but claim in future is creditor. Okay, right? So the local shopkeeper is selling goods to you all, okay, right? But he purchased somewhere else. He purchased from some other person, some other business organization, right? By not paying money to that particular business organization, and the businessman record those business organization as creditor. Why? Because here the shopkeeper liable to pay in future to that particular business organization, and he will record those business organization as creditors. Okay, so debtors is an asset and creditors is liability. Okay, next, purchases. It's not at all new thing to you all. Purchase refer to the amount of goods by the business for resale or for use in the production. Okay, a businessman who purchases certain amount of goods for resale. Yes, no businessman kept idle the stock or the goods purchased by him. Yes, he will try to resell them in no time to get more profits. Okay, so that particular goods are called as purchases. Sales. Sales refer to the amount of goods sold that are already bought or manufactured by the business. Sales is the amount of goods sold to the persons, right? Yes, you can recollect the transaction happened just, okay, the shopkeeper sold paste to you for rupees 10. Okay, so the transactions of selling of goods, yes, which consist selling of goods to the customers, called as sales. Yes, you can observe the picture and you can grasp something. Yes, here is a shopkeeper selling his goods to a customer. Next, stock. Stock includes goods unsold on particular date. Stock may be opening stock and closing stock. Yes, what do you mean by stock? Bought by the goods bought by the businessman for for resale is known as stock. Okay, right? On particular date, certain stock may be unsold. Yes, entire stock should be sold them. Okay, but businessman, at the time of closing date of accounting period, certain stock may be unsold. Okay, and you can grasp more information by seeing this picture. Yes, a godown or a warehouse. Okay, the stock where kept is, we can call it as godown. Yes, the godown, it is showing certain stock of unsold stock of business organization. Next one, income. Income is the amount received through business transactions. Okay, yes. How can a business organization receive income? Through sales only. By selling the goods only, the business organization will get, yes, income, right? Income is the amount received through various business transactions. Okay, and income, we can classify, we can divide income into two types: capital income, revenue income. Okay, right. Capital income means we may collect or we may receive at one time. Okay, that is called capital income. Revenue income, which may collect, which we may receive on day-to-day transactions, so called revenue income. Okay, next we'll learn more in detail in further sessions. Expenses, right? It's an adverse word to income, right? It is the amount spent in order to produce and sell the goods or services, right? To run the business, so we have to expend amount on certain activities, so called expenses. Again, expenses are of two types: expenses, capital expenses, revenue expenses. Capital expenses, which spend for one time, yes, yes, for the long time requirement of the business itself. Example for capital expenses: purchase of land, purchase of building, purchase of machinery. Okay, that will buy machinery, or will we, yes, we'll purchase furniture, not for resale. Okay, not for resale, but to continue with the business for a long time. Such type of expenses are known as capital expenses. And coming to next one, revenue expenses: the expenses which are spent on day-to-day activities of the business, day-to-day transactions of the business, for smooth running of the business, are known as revenue expenses. Okay, example: purchase of raw materials, salaries, purchase of goods. Okay, so right. Next, voucher. Right, it is a written document and documental evidence of particular transaction for the value stated in the voucher. Receipt, yes, we can learn by seeing these two pictures on the screen. Yes, receipt is an acknowledgement for cash received. It is issued to the party paying cash. Okay, right. The above, yes, this is, the picture is voucher and this picture is receipt. Okay, students, do you find any difference between these two? I'm saying that this is voucher and this is receipt. Okay, this is documental evidence for transactions happened. Okay, this is the evidence. So called, it is so called as voucher, and this is receipt, means here payment happened here. Okay, and this is transaction happened here, and this is payment happened here. This is the main difference between voucher and receipt. Okay, so these are the 18 new accounting terms for the better understanding of accounting. We'll may see, yeah, more and more accounting words in further sessions, and we'll grasp more information for smooth accounting process. Okay, right. In today's session, what we covered so far, yes, the introduction of accounting, introduction of bookkeeping. Before to that, yes, we had a glance on the entire syllabus of commerce, theory book for 50 marks and accountancy for 50 marks. Okay, and classification of each and question wise classification of subject, and we learned more information regarding the main aspects of today's class: bookkeeping, accounting, accounting process, accounting cycle, and finally basic accounting terms. Okay, students, yes, take down these questions. So these are the important questions so far covered in our today's session. Important questions, short answer type question, explain accounting process within the brackets, 5 marks. Okay, 5 marks. Important question, transaction, what is bookkeeping, define drawings. Okay, this is for today's session. We'll meet again in the next session. Thank you very much, one and all, for providing this wonderful opportunity for today's. Thank you, principal madams. Thank you, principal sirs. Especially my motivator, my mentor, my principal madam, Srimati S.P. Prasanna Lakshmi Garu. Thank you very much, ma'am, and my computer operator who helped me a lot. Thank you. Madam, over to you.
Okay. The lecture was very good. Sorry for the small little interruption in between, but nothing to do. We have to bear as we are depending on our live classes. Today weather is dull.